let's talk about the psychology of when to take profits, the cycles that we know are there. And let's just think it through together because it's going to vary for everybody. And that's a key thing. So as we know, crypto is very cyclical based on this everything code thesis that I've built, which is there's a debt refi cycle that happens every 4 years because everybody reset their interest rates in 2008 to zero and then made all the government debts in around 4 years, 3 to 5 years. And it's created this endless cycle, which happens to be the same as the Bitcoin halving cycle and the US presidential cycle. So we're faced with these cycles. And out of 3 years, crypto is the best performing asset in the world. In year 1, crypto spring, year 2, crypto summer, year 3, crypto fall, and macro spring, summer, fall. And then year 4 is the worst. And the worst is what scars people. And people want to know how to deal with this.
Raoul begins by discussing the cyclical nature of the crypto market. He mentions his everything code thesis, which ties together several cyclical phenomena: the debt refinancing cycle, the Bitcoin halving cycle, and the US presidential cycle. According to Raoul, these cycles align in a way that significantly impacts the performance of crypto assets. Raoul highlights that out of every 4 years, 3 are generally favorable for crypto, while the 4th year often brings substantial challenges. This 4th year can be particularly scarring for investors, and understanding how to navigate this period is crucial. Don't forget to like this video and subscribe to our channel for more insights into the world of cryptocurrency.
So how I think about it first is you've got to establish what are your goals here? What is your time horizon for your investments? So if you're saying my big macro thesis is this space goes from, let's say, $2.5 trillion today to, let's say, 10 to 15 trillion at the end of this cycle, depending how big this cycle is, to 100 trillion by, let's say, 2032. So we've got the largest wealth generating macro trend of all time, and it's still in front of us. Yes, the early days were super high returns, but it's still super high returns. So we don't want to f this up, right? We want to capture that. So a lot of people start thinking, well, should I trade out in macro crypto fall, try and sell that peak and then buy in the bottom, and then I don't have to go through the horror of the 75% drawdowns? Let's think about this. Firstly, I'm going to give you what I did and the lessons I learned, and then we'll talk about how we can deal with this cycle going forwards so I can help you navigate your needs. And we've all got different needs here. So the first time I bought Bitcoin was at $200 in 2013. I had a 5 to 10 year view that this was going to be worth $1 million, and it was $200. And I discounted myself by 90% for being a moron, thinking that it could go to $1 million. So I said, listen, it's worth $100,000. This is $200. This is the best opportunity I've ever seen. So I treated it like a call option at the time. So I didn't put a huge amount of money in, but a decent size. And I said, right, I'm just going to forget about it. It kind of went up like a rocket ship straight after that. And I was up 5x or something very quickly. And I was like, oh my God, I'm clearly George Soros. I'm the best trader ever. And then it fell 85%. And I just didn't worry about it because it was a call option. At the time, I thought, well, it could go to zero. So I'll just see. Let me play this out. That's a macro time horizon, long-term time horizon. I thought if I just hold it long enough, we should generate huge returns. By 2017, crypto's taking off again, and it's at $2,000. And I was now up 10x, and the Bitcoin forking wars happened, and I mid-curved it. Mid-curving it is, if you remember, is when you're overthinking a very simple trend, which is, you can be the moron on the left or the Jedi master on the right, but in the middle is where you do all of the overthinking. The moron on the left is it goes from 2.5 trillion to 10 to 15 trillion to 100 trillion. Just do that. Everything in the middle is regulation. It's what about, what happens if somebody replaces the tokens that I've got? It's what about forking? It's all of these things. They're all noise. So I succumbed to the noise. I'm like, I don't know what this means. Do I switch into one, Bitcoin Cash or whatever? Stupid. And so anyway, I took profits and I was up 10x and I thought I was great. And then it went up another 10x in the next 9 months. 2017 was staggering. I'm like, oh, wow. Okay. But I wasn't worried because I've made 10x. So I try not to have regrets about positions. And then it fell, and it fell 85% as usual. And 2018 2018, there was all the tether flood at the time. There was a whole bunch of misery around the 2018 19 bear market. So 18 was that terrible year. Then it bases in 19, starts rising. I start watching it and then start digging in, doing the homework of, do I want to get back in meaningful size? And then I'm watching the chart pattern, looking for an entry, and it does this massive kind of wedge pattern, gets to the top, tries to break out, drops into the middle on the COVID massive sell-off. And I'm like, this is the opportunity because I know this chart pattern, the likelihood it's going higher. And so I got in there and I massively sized up what versus my original bet. Maybe it's 6-7 times bigger than the first time I went in. And I've added since. Okay, so how did I do? I felt great because I bought it low, I'd sold it into a big rally in one cycle, then bought it. I'd ridden one cycle all the way up and down, rode the other one up, sold out, then rebought into maximum pain, the down 50% day. And then the breakout of 10,000 above that. I thought, yeah, I've done pretty well with this. I then went back and looked at what happens if I just kept my original bet, which was much smaller. I would have made 5 times as much money by not doing anything. That kind of upset me a little bit because I thought, yeah, I was a macro guy, I traded it well. No. The issue being is this asset is in a logarithmic uptrend based on a network adoption model, Metcalfe's law. And so all of the highs are higher and all of the lows are higher. And when you put it on a normal scaling, it keeps looking like a bubble and then this. And when you look back on the chart, these little blips versus this because it's this gigantic trend. So what you start to realize is the drawdowns are a feature and a benefit if you think about them right. So this time around, I then calculated, okay, what happens if I just added my original size? Again, it wasn't the biggest bet in the world, but it was good enough. Every time we had one of these massive drawdowns, so crypto winter. And let's assume again that Raoul's a total moron. He misses the low by 30% because to market timing, this stuff is hard as hell. If I'd have just done that in the 2 cycles, 2013 and 2018, I would have done 25 times better because you're compounding. And that really struck me. I'm like, okay, now I understand. So this cycle, the 2022 downside, I didn't do anything except buy when I thought we were close to the bottom. And I started buying in June and I got the ETH low in June. And then I bought more and I bought some Solana in June actually, which was too early. And then I bought again in October, November, and it worked out beautifully. And that was based around my liquidity cycle and where we are in this whole macro crypto summer stuff. And we were just finishing winter. So, and then I found I'd gone to my all-time highs in P&L way before the market had even got close to all-time highs. Now, it helped that I managed to nail Solana, but even then, by compounding and adding to trades into those, you do really well.
Raoul delves into his personal investment strategy and the lessons he's learned over the years. He emphasizes the importance of establishing clear investment goals and a long-term perspective. Raoul's macro thesis suggests that the crypto market, currently valued at around $1 trillion, has the potential to grow exponentially, potentially reaching $100 trillion by 2032. This represents one of the largest wealth-generating opportunities of our time. Raoul shares his own experience with Bitcoin, starting with his initial purchase at $200 in 2013. He treated his investment as a long-term call option, which allowed him to weather the extreme volatility of the market. His strategy involved holding through significant drawdowns, recognizing that the market's long-term trend was upward. Thank you for watching. If you found this discussion helpful, please give us a thumbs up and subscribe to Unscripted Crypto for more expert insights and analysis. Let us know your thoughts in the comments below. Happy investing.